Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So as usual, today we have prepared the new weekly fundamental report in the gold market. So there are a few interesting moments there, particularly speaking some political events in the European Union. And also we have taken a look at some worrying indicators on the stock market and employment in the United States. So as we said, employment and job market will be next in the chain of the markets that should reflect the impact of the structural crisis in the United States. So first is usually it's coming to interest rates, then it turns to the real estate. So the situation in the real estate market we have discussed yesterday in the Forex market report. So there also situation stands really tough. And now we're turning to employment. That's very tied in tight relation to the stock market as well, because the stock market really includes big investments from the households, and they already have started selling their positions, closing their positions. So in general, from fundamental point of view, gold stands in the same situation as other assets and the currencies that fundamentally are strong, but currently have no choice but just stands on the impact of the strength of the United States dollar. So this is temporal, tactical, and technical, better to say, demand for a currency, not because the people just see some undervaluation of the United States dollar. I would say mostly that's opposite situation, but just because they have no choice. They have to buy dollars just to serve the debts and finance the expenses that's rising together with the rising of the interest rates by the Fed. This is just how global economy structured and how it's working because of the dominance of the United States dollar. And this byproduct of that is that even good assets with a good intrinsic value, I would say, as we discussed yesterday, Australian dollar, Swiss franc, they have great fundamentals. Gold also stands in this gathering of these assets, but they also are moving down just because they become the hostage of the rising demand for United States dollar. This is temporal effect. It's just results of the money flows on the markets, response of the markets on the rising rates. So that's what we are discussing in today's report. On the technical side, currently, guys, it's a bit, not quite tricky situation, but it's a bit difficult to make some extended forecasts because in all time frames we see the bearish trend. Market is not oversold in any time frame, so potentially it could go further to the downside, but we suggest that downside performance currently is limited. Fed has announced 4.5 interest rates by the end of this year, suggesting very slow increasing of the rate in 2023. We agree totally with that, but not because Fed can't raise the rate, but because the United States economy can't care actually high interest rates. It's because it will be total collapse. So we suggest that the 4.5 interest rate right now is mostly priced in already in the current level. That's why we would not expect too significant drop of the gold in the nearest term. So it could fluctuate around the levels that we have, 16 even, 1650 as we said and talked about this previously, but supposedly we should not get any significant drop right there. At the same time, we do not have any bullish signs right now. So for taking some tactical bullish positions on intraday charts, we still need to wait a bit more and see what the patterns might be formed. So today we discuss what particular patterns we could watch for on the common week. On the bearish side, this also not many things to do. So from one point of view, market is flirting around the targets, 1640. Some other targets we will mention in this report stands a bit lower. But we do not see yet that this action is over. So from that standpoint of view, it seems that maybe it is possible to hold some part of, at least some part of the position, existed position, if you have any bearish positions right now on the gold market, for the possible deeper downward action. At the same time, it is not a good point for taking a new position by far, by the same reasons. Because of the targets, the market stands at the support, and because of no pullback have happened yet to consider the new short entry. So this is a bit, well, blur situation for the bears, what to do currently. For the bulls, it's a bit more simple scenario. So we could take a look first on the daily chart. You could see market hits 127 extension around 1646, breaking this pennant that we discussed. Next target stands around 16 even, that potentially could be reached a bit later. But on the common week, we think that we could focus on some local setup that might be formed around this area. So take a look on the fall time frame chart. We considered possible head and shoulders pattern. So it might start somewhere from the 1630 and 1640 area. There's two extensions of this most interesting swing here, guys. You also could recognize a butterfly pattern as a left arm, potential arm of the hand and shoulders. So if any head and shoulders will start to form, that's the setup that bulls could keep an eye on. It doesn't suggest that it will be some major reversal, but some deep retracement, some pullback in the shape of some ABCD pattern might happen. It's usually we are doing with the hand and shoulders patterns. That's what about the bullish context. On a 30-minute chart, we have minor butterfly that's forming here. It's the same downside destination, 1636, which is very close to 1633, right there, around this level.